Hi, traders, Greg here with a market update. Okay, so this week has started a little bit on the slow side. There hasn't been any key economic data releases or any event risk. But having said that, what we have had and what the market has been focused on has been the high level meetings, trade meetings between China and the US has been taking place in London. So those meetings have been going on for the past 2 days. Look, no one expects that these meetings will result in some sort of comprehensive trade deal. But what the meetings hopefully are working towards is ironing out some of the differences between the two countries and working towards some trade concessions and a stepping stone towards eventually a trade deal. Nevertheless, the fact that China and the US are talking, and from both sides we've heard that they are being very positive, very productive talks. Look, the market has likes it, and obviously has been trading this positively. So we are trading at the moment very much risk on, bullish markets. So if we look at US equities, NASDAQ and S&P, S&P is about 100 points away from record highs at the moment. Very close. NASDAQ, 200 points away from record highs. So it may not be long before you see those headlines that equities are making new record highs. One country that looks like it will be making new record high is here in Australia, the ASX. If we look at the way that the ASX futures traded overnight, there's every chance that we will be making new record highs in Australian equities. So look, equity space at the moment is in a sweet spot. Selling equities certainly has not been working. And it's hard to make a case at the moment, to see some sort of big equity reversal. So, buyers obviously, staying long in the equity space. Look, in the currency space, generally when you have risk-on bullish markets, the risk currencies are the ones that work well, and we're seeing that at the moment. Aussie's trading at 7-month highs, trading above 65 cents and doing well. The risk crosses are also doing well, like Aussie yen, for example. But one currency pair that's actually maybe worth looking at the moment, and that is Aussie Swiss, for the simple reason that you could get both legs working here. In the next week, we do have a Swiss National Bank meeting. They have deflation. They will be dropping rates from 0.25% down to 0. And yes, there's market talk that further out they may even go negative again. So at some stage, you would imagine that the market will start selling Swissy. It seems to be overvalued for where risk is at the moment, and also obviously where those Swiss interest rates are going. And then obviously, if we continue to see bullish markets, the Aussie's number one risk currencies globally, and then also with respect to trade deals, if we start working those out, Aussie will benefit as well, and especially with China, because it's a China proxy, the Aussie. So Aussie Swiss is down at very depressed levels, just trading above 0.53. Record lows were below half of Swiss franc. Look, it seems like for a long-term trade, it's looking in a very good buy area at the moment. So yes, long Aussie Swiss is something that certainly like a lot. If you look at the commodity space, commodities are doing exceptionally well. Silver's been a standout. We talked about this, talked about it before. It went $35, big technical level, psychological level. It's burst through there. It's almost gone up to $37. It is now at 13-year highs. Record highs still a long way away, up at $50. But interim, I guess the market will start looking at $40 targets for silver. And also crude is starting to look good as well. It recently just traded up this week above $66. Crude obviously does not like trade wars, doesn't like recessions. It gets smashed down on that, but it does like the opposite when we see economic growth and when we see bullish markets. So it's hard to make a case for selling crude at the moment, and buyers probably long there. Potentially, if this risk run continues, it could make a run back up to $70. So let's see. Look, even crypto at the moment is obviously doing well. It's a whole risk space. Bitcoin's trading, with like 1% from record highs. It's around that 110,000. So yes, risk across the board doing exceptionally well at the moment. But look, there is one thing that's coming up on the radar today that could potentially spoil the risk party in the short term, and that is some key economic data finally coming back out of the US, and that's US CPI data for May, the monthly CPI data. Market does expect this data to CPI marginally go up. So year on year, headline number is expected to go from 2.3% back up to 2.5%, and core CPI from 2.8% to 2.9%. So CPI is starting to move back away from 2%, and this is some of the tariffs starting to come into CPI. Now look, this is the market expectation, so not sure if that is going to hit market too hard. If it does, the print comes out on expectations. Markets generally move when the data comes out above or below expectations. So look, if this data, the CPI data comes out above expectations, get a core print, say 3%. The optics of 3% obviously don't look good. That certainly could see some risk-off trading. Obviously, the first focus is going to see what happens to US bond yields. If we see US 2 years, 10-year yields spike up. The key level for US 10-year yields is around about that 4.6% area. That's sort of the danger zone, red flag zone. We're currently got US 10-year yields trading around about 4.47. If they do go above 4.6, then I would say we'll start to see the risk party spoil. Obviously, we're going to see the US dollar bid. Probably dollar yen will be the one that will probably see the most action, because it's got the highest sensitivity, highest beta to US bond yields, spiking higher. But that is if we see a print that comes out above expectations. So the probability of that of 3% may be on the lower end of the scale. Anyway, so yes, tonight US CPI obviously a big risk event. So good luck with your trading, and we'll catch back in with you shortly.